We've had a 161% single day gain in SPRT. So it seems like the Reddit guys are really hard at work, or support.com is booming right now. Whichever one it is. We're pretty overstretched right now. I mean, you can tell by this parabolic blow off top, which means we're going to have a snapback, and that snapback may have already started, as we've already pulled back to the $32, $33 range ever since. Despite this pullback, despite being overstretched, I still have targets overhead at 137, possibly as high as 234, even more than that, potentially. But right now, the rubber band is stretched and we're pulling back. So now is not the time to go long, in my personal opinion. What we have structure-wise so far is a nice Elliott 1, 2, and 3 wave. The 1, 2, we had a standard 61% retrace for that wave 2. This took about, about a year, something like that, a little over a year. And we hit 1.38, the extension of 1, 2, which is the standard third wave target for a wave 3. And that took us up to about $57, $58. Fourth waves are typically the longest and slowest and most excruciating of the subwaves within an impulsive structure. So this is why I emphasize not to get in too much of a rush to get in just yet. However, if this fourth wave holds and we stay above our 1373 support, as marked on the chart, we have the setup for a potential fifth wave blow off. And that is not unprecedented. If we look at the third wave structure here, which I'm hovering my mouse over right now, we could see we had a 1, 2, 3, 4, and then he just had a rocket take off. That's what a fifth wave extension looks like. Now imagine that, but happening on a larger time scale over a larger price range. So again, not anything to get in the rush yet. Again, our first wave took what, about 367 days, about a year, exactly a year actually. Second wave took about 58 days based on my count here, and our third wave took about 100 days to develop. So which tells me the fourth wave may take several weeks, may take a few months, but when that fifth wave starts up, it'll take off. Well, we're going to have some signs first. If you're trying to go long, wait for at least the A wave to bottom first. I have a kind of a mock-up of what a correction may look like. Again, I don't know the future, but typically you have a 3-wave correction that'll take you down to whatever our fourth wave bottoming target is. So at least wait till the A wave. I would say let's see this thing drop below 25, maybe $20 before you start accumulating positions. When you accumulate, don't put everything all in at once. Accumulate a little bit at a time, over time. And if you're trying to get into leverage, either you're borrowing shares or you're using call options, wait. We need to get that appropriate C wave first. Until we have an appropriate 3-wave correction, it's very dangerous to get in any leverage positions. Now, for those of you who are shorting, if you had already gotten into the short positions using puts or anything else before I release this video, good for you. You've probably already made a pretty good profit. For anyone else, if you do want to short, buy lots of theta. What I mean by that is make sure your expiration date is far out and any kinds of puts you buy. You don't want to get killed on this. Very dangerous, just as with going long, going short can get you killed real fast, especially if it's a short expiry. You can lose everything you got, you can lose your shirt. So again, if you are shorting, you can go short, buy a lot of time. You may have a better opportunity to short once this A wave is done and we have a B wave bounce. At that point, you'll have a more robust setup to make a short for the C wave. That's typically how we do it. So again, I'm looking for a sharp A wave decline, which we may already be in the middle of right now. See how the B wave shapes up. B waves are also tricky. They go sideways and they're slow. And then the C wave may be sharp and swift, may not be. But patience is a thing here. We'll see how the pattern shapes up. So thank you for watching and happy trading.